So good afternoon, ladies and gentlemen. It's a pleasure and an honor to be able to moderate this second panel of the day on these very important issues. And we have heard an important speech showing where the things stand from a perspective. And we have now 1 hour and a half, if I'm right, but you correct me, 1 hour and a half, to dwell on the different aspects of the issues related to ethics, behaviors, incentives, and more precisely, the financial system. As you have seen from this bio notes in the program, we are happy to have all the most important stakeholders, let's say, of the financial system around the table. We have Sue Lewis from the consumer perspective. We have Jeroen Hooijer as a regulator, as if you are around me, to put it into this category. We have Nicoletta Dentico, who is a board member of Banca Etica, so the financial actor per se. And you have Michael Bodolfsson, who is on the trade union side, if I understand, workers of the financial sector. So we can look at the different perspectives, different issues related to ethics, incentives, and behaviors from at least 3, if not 4 perspectives, including the regulator on the top of it. I propose, and I think we agreed more or less, to run this panel in 3 sections, 3 sets. The first one would be related to the questions, fundamental questions. What is ethics about? What we mean in different contexts when we use the term ethics. It's a little bit like a black box. It's some very, very important what is in, but it's better maybe not to open it too often because there's a lot of unanswered questions that may appear. So at the start, we go with this. Then we open for a few minutes floor to the audience. Coming back to the second part, which will be related to the relationship that might appear between incentives, behaviors, and ethics. And the third, and operating on the same basis, and then we go back to go forward to the third block of the panel, which will be devoted more precisely to where are the urgencies. If we take the incentives, behaviors that we would like to achieve, when we have more or less synthetic definition of ethics, where and how should we move? What are the fields? What are the professions? What are the aspects and the portions of the financial system where the urgency is the clearest? So without taking too much time of the speakers, I would like maybe to invite you to start with the first question. What is meant? What is meant in your organization or by yourself when we use the term of ethics?
Thank you very much. Is this working okay? Yes? Thank you. Thank you very much for inviting me here to represent consumers. Remember, I have quite a UK sort of perspective on things. So I think we know what bad ethics looks like. It looks like £21 billion worth of PPI mis-selling. It looks like £4 billion of forex rigging. It looks like £12 billion of personal pension mis-selling. And it looks like £2 billion of mis-selling of interest rate hedging products. That's what bad ethics looks like. Okay, and what does good look like? I'm going to come on to a worry in a minute. I found this actually. I'm going to read it out. It comes from the Financial Services Authority, which is the predecessor to our Twin Peaks model.
Looks like your mic is not working.
Yeah, it looks like my mic is not working.
No.
Sorry, you can probably hear I shout pretty loudly. I was muted. Now it's too loud, is it? Okay, well, I gave you a whole load of numbers about what bad looks like. Let's not go over those again. So the Financial Services Authority defined ethics as this, or an ethical business: open, honest, responsive, and accountable, relating to colleagues and customers fairly and with respect, committed to acting competently, responsibly, and reliably. And it's pretty obvious the Financial Services Authority did nothing to check that the organisations it was supervising did any of those things, because that's how we ended up with all those billions of misbehaviour and mis-selling. But I think ethics is actually more than this. I'm really struck by the strapline, making finance serve society. Actually, society has served finance during the crisis and after the crisis. We, citizens across Europe, stand behind financial institutions. So it's very important that we actually look at ethics, as our previous speaker was saying, in that wider societal context. It's, you know, I think financial services are unique in being needing to be responsible to the society that has served them so well. So how's this going? Let me give you 3 names. People with energy, people with intelligence, and people who were killed by integrity. Number 1, Anthony Jenkins, the CEO of Barclays, who tried to get culture change within Barclays Bank. He tried to get the consumer at the heart of what they did. Number 2, Martin Wheatley, the CEO of our Financial Conduct Authority, also sacked, let's call it sacked, for doing his job too well in holding financial services to account. Daniel Godfrey, name that may not be quite so familiar, who was the Director General of our Investment Association. And what Daniel tried to do was to get more transparency, get his membership to be more transparent about asset management costs, and they really didn't like that. So Daniel went as well. And I'm seeing a kind of, there is a sliding back towards, okay, you've beaten us up, now it's time to get back to business as usual. We're in a very dangerous place at the moment. In the UK, HSBC Bank went to the government, had our tax regime changed so that it favoured the big banks and not the new entrants, a blatant attempt to kill new entrants into the market. They watered down the ring fence and, you know, da-di-da. A bank going to the government and if getting those changes made, to my mind, is not ethical. It's not serving the society that served the banks so well. So I would really like to make a plea for ethics being a much broader concept than just an internal and customer-facing thing. Thank you.
Thank you. First voice in this attempt to define ethics. Could you follow, Jensen?
Yeah, with pleasure. Does this work now? Maybe I should also
Right.
demute.
I think, yes, you need to
Maybe I have to do something.
switch on.
One second. I'm very technical, as you can see. It's on. Okay,
It's
good.
on.
Then
They
I
control it.
put the mood back. Okay. So thank you very much for asking me. I must say I find it a challenging subject, and when I prepared myself, to be honest, what I always do, I ask one colleague to ping pong a bit and to discuss this, and she's there. That's Corina Persiano, who's sitting there. So some of the thinking is mine, some is from her. We came already to the conclusion that there is, of course, no European directive dealing with ethics and integrity. That would be great. So much of what I say is, I'm on safe grounds, is my personal view, and I think I should stress that, because if you work for the Commission, you always have to say this. Huh? So it's my interpretation, and I think one first comment for me is that ethics, integrity, probably national and regional perspectives are different. Something to bear in mind when we look into this. And the question would already be, to be honest, I have more questions than answers, Chair.
It's very important too.
Is there
It's
kind of
half of the answer when you have a good question.
yeah? Is there or can there be a global approach? Certainly, if you speak about global players, like in the financial industry, this is a difficult one. Second point for me is, and I'll throw a few things to you, and you throw it back to me if you don't like it. Is of course, much of our professional activities are also driven by our own personal approach in this. And when I came to this, and I thought, well, I work for the public sector, and we look, of course, at the private sector, the financial sector. As an official working for a public organization, of course, I'm bound to be at least as ethical as someone in the private sector, or more. It's a question. Should we ask more from the public sector or the public supervisors, or should we ask more from bankers? I don't know, but or are there different categories? Having said that, of course, we all have our own moral compass that we take with us. We have that at home, we have it in the weekend, we have it in the office. And that will come into play. And if I would translate this in a very simple question, if I were to work for a bank or for an asset manager, and at the end of the day, I would have to explain, or even better, I would have to sell something to my mother. Would I sell this to you like I would do it to my mother? It's a kind of litmus test, I think, that can apply also in a bank. Or what I say sometimes to my colleagues, okay, you can claim this, you can write this. How would you think about this if this would be tomorrow in the Financial Times? Would you say it in the same way? It's a kind of mirror test. Let's call it a mirror test. How would others look at this, or your family? Now, if I move quickly to the financial sector, why is ethics so important in the financial sector? Is it more important than in other areas? Is also a question. And of course, as Sue has said before, we have had a number of high-profile scandals that could be personalized very, very much. I think the case is made. A number of these cases are there, and after the 2008 crisis, we have seen more of them. And unfortunately, it didn't stop in 2008. Some people thought, this is all of the past. No, some of these scandals came to life in 2010, 2011. So it is still going on. And then another question is, of course, is the financial sector, because you deal with the monetary nature of work, does that lead to a certain tendency to have lower or higher ethical standards? And the related question is the culture different in the financial sector than other sectors? Or does it attract other people, staff in the financial sector than in the past? We know these examples, but are they examples or are they a trend, or are they common in these kind of very big institutions? Asking the question is almost given the reply, but well, you understand a little bit where I come from. And one or two small other reflections I had is that the financial sector has become very big in comparison to our GDP. I don't know the exact figures. I've seen 10% up to 20%. Maybe truth is somewhere in the middle, depends which country you talk about. Has the financial sector not taken up a too big part of our GDP? They're bigger than the car industry. We all talk about the car industry and other scandals. But is it an industry? We speak about products. It has become an industry, but is it not too big in comparison to the real services and the real products that are produced in the GDP? And to what extent do then indeed ethical behavior, culture play a role in that? Maybe I stop there. Thank you.
Thank you. Can we move to Nicoletta?
Well, thank you. This is a very challenging question, and let me start by thanking Finance Watch for giving Banca Etica and myself in particular the opportunity of exchanging views on these very important subjects. Well, I would like to say that, first of all, there is, I think, a long history of ethics attached to the financial world, to the financial sector. I think in a very recent time we've lost memory, we've lost sight, we've lost knowledge of it. But, you know, starting from St. Francis, going through Max Weber and the ethics, the Protestant ethics of capitalism, I think we have a very long history to which we could go back and to which we could cling at this very moment of devastation. That's, I think, the word that we could use. And that's, in a way, the legacy that
the bank that I belong to, which has the kind of boldness of calling itself ethical bank, a very strange oxymoron that we tried to interpret and to embody about 20 years ago, at a time when maybe the need was not so much there as there is today of an ethical bank. For us, being ethical has a lot of implications, which I guess in a tagline would basically go back to what was said before about reshaping the building, or actually recreating the conditions for some social norms to be attached to the practice of lending and to the practice of financial services. So at the end of the day, it has to do with responsibility for the public interest, which is basically what Sue was already mentioning, serving society. I think this issue of responsibility has nothing to do with really moral superiority. This has nothing to do with moral superiority. It's the basic understanding that, if you pursue your own pure individual interest, you may gain a lot, but in the end, history will kind of backfire, and there will be a kind of back wave coming. That's what we see in this period, in the financial sector, in the general industrial sector with the destruction of the planet. We see it in the military sector and the end of diplomacy and wars being waged without even declaring them every day. So it's all interconnected. And I think another issue is that we should stop looking at the financial sector in isolation, because not only it has become too big, but it has become to have too many repercussions on the other sectors. I think it's got to do with keeping, in a way, the promise that you have made when you started your own financial project. Keeping the promise. When you are telling your client or your the person, the citizen, let's use this word, the citizen, not the person in front of you, that you're going to meet his or her own economic needs. Cheating with this person, taking advantage of the lack of knowledge, lack of access to information, is actually cheating your own mission as well. And I think Banca Etica in that respect, is now increasingly, to our own amazement in many ways, telling us that although we are a very perfectible, I'm not here to preach, and I don't want to make any propaganda, but although we are very perfectible, 15 years of this bank, which the Italian bank would not bet on, and they tried to use all possible tools to stop us from existing, now that we have accomplished our 15 years of age and we are kind of grown-up adolescents, it's coming increasingly clear that being ethical is also being smart in a way. It's actually not doing good, but actually doing your business in a proper, promising, robust and solid way for the sake of your own mission, for the sake of your own business. So it's the numbers saying this. Whereas I'm talking, of course, about the Italian scene at the moment, and then but where all the average, the system, the financial system in Italy more or less has all the minuses or no growth at all. We have all the pluses. We have an increase of lending, an increase of savings, an increase of everything. And the deterioration of our credit at the moment is 2.9% when the average is 10.7% in my country. So I think it's actually the point I want to make, that really away from any moral superiority, being ethical in the banking system, in the financial sector, serving society, serving the people, serving the economy, may even end up making you even more successful.
Thank you.
Yes, thank you for that, and also thank you to Finance Watch for inviting us here to sunny Brussels, making us feel at home. Even inside here, we feel the cold breeze. employees. My members have, if any, felt the crisis. Many of them have lost their jobs since 2008, and even more, you might say, have lost the pride of doing their job, which is quite severe. And this thing about defining ethics, I think I will start elsewhere, because it could also be a quite theoretical debate, and also it raises the question: Are you in fact able to regulate greed and bad morale? So I would start talking about what is finance for? What is the purpose? Why do we in fact have a finance sector in Europe? Well, these past 7 years have taught us the risk of the sector, but what is the opportunity? Where's the purpose? When I talk to analysts, when I talk to journalists, and what I have been doing these recent years, they all tell me, well, Michael, you know, the purpose of the finance sector is to make money. This is what finance is about. It's about making money. And then I ask them, I'm Danish, you know. Then I ask them, what is the purpose of Carlsberg? And they think and they say, why was this company found? And they say, oh, the purpose of Carlsberg, it's easy. It's to brew the best beer in the world. I know I get problems here in Belgium, but this. Then I ask them, what is the purpose of Novo? You know Novo. They all say, oh, it's to treat and cure diabetes. And they're right. Companies do have a purpose. And the purpose of the finance sector, it's not to make money. The purpose of finance, it's to provide financial solutions to customers, private and business, to serve society. It's to create financial growth for customers, giving them financial freedom to fulfill their purposes and their wishes. And this is, in fact, the purpose of the finance sector, giving real finance to real people. And of course, to do so, of course you have to make money. As this goes for Carlsberg, for Novo, and this also goes for the finance sector. If you do not make money, you will lose your company. There will be no jobs for my members. There will be no financial solutions for customers. And that goes without saying. But again, coming back to ethics, it all starts with the purpose. I can imagine many angles about ethics when it comes to banking, and we will discuss those. I have heard very interesting interventions here, but my starting point will always be that of the purpose. Real banking for real people, creating jobs and growth for society. We have been doing that, as you were saying, for more than 100 years. We have been doing that in the finance sector, but we lost it. We lost it somewhere after year 2000. So what happened there? Well, one thing is that this sector should skip focusing on shareholders first and last and get back to real banking for real people. And this is good ethics in banking.
Thank you very much. Thank you also for sticking to the limited time that we allocated for each of the speakers. I propose that we open the floor to questions, remarks, not too long remarks, but questions. Then we go back to the panel and try to summarize and move to the next step. Who is wishing to take the floor? Yes?
Jacques Terret from Transparency International. I hope we will talk about whistleblowing. 2 days ago, I had in my office a compliance officer of a large bank in France who had been fired because he had informed his hierarchy and eventually the press of frauds in his bank. And he said to me, no way, I couldn't win because even the regulator did not follow me because it was too complex and it would have been a very difficult time in that bank. So he suggested to me that possibly a compliance officer should not be fired unless the regulator has accepted it.
Thank you. That's an important input to probably next round of the discussion, but thank you for spelling it out. Other issues or questions? Not too many. So we can move forward. I would say that from this, what I get from this first block of answers, that if we look at ethics, and we start with what has been said about sense-making and purpose. And this sense-making and purpose can be allocated or can be situated, I think, at various levels. There is the macro level of social purpose or social license to operate. There is the meso level of the culture of individual institutions that you referred to. And there is the micro level of the personal behavior, personal values, personal moral compass. And of course, in the background of all this, there is a meta level, which is the history you referred to of the discussions, the moral discussions about money, about finance, about lending, about future, about promises, and so on and so on. So the difficulty of the task that we have in this panel and the people that have to address these issues is not to forget these three levels, macro, meso, and micro, and to have a coherent sense of purpose running from the top, let's say top being the macro, to the ultimate decision-making point where I decide to do or not to do something. And this is the challenge that is beyond compliance. That is the challenge which is, I think, beyond the reach of simple legislative measures. It is something that has to do, and then we move to the second block, that has to do with proper commitment, convictions, incentives, and at the end of it, behaviors. So in the questions that have been addressed to the panel, there is a lot about incentives. If we go back to the economic thinking about incentives, it's a way of instrumentalizing someone. I put a carrot somewhere, or a stick, but with incentive carrot, in order to have somebody moving in one direction. I want him to move, so I give the purpose. So how can we live with how can we use incentives not to get outcomes, like in all managerial literature, let's say, and practice? The problem is about effects. Here we want to have behaviors. We want to have quality of behaviors, not necessarily the results being somewhere on the second line. So how can we move from, with this definition in bits and pieces, but definition of ethics, how can we move now to applications, to the sector, to institutions, to people? Sue, you want to start again, or maybe let's start from the other end now? Michael, are you ready to pick it up?
Oh, yes.
Okay, thank you.
I'm a politician, so I'm always ready to speak. So if I if I can start where I ended last time about the role of finance in society, it is extremely relevant, of course, to talk about the incentives and controls and for whom. When we talk about incentives, we have this tendency to talk about the remuneration system, about advisors and top management, and I will also get back to that later. But also here we should consider starting the debate elsewhere, because what are the incentives for the decision makers, those who really are in charge? What are the incentives for society, and what are the incentives for investors? Because some of the decision makers, the Commission, Parliament, supervisory authorities, they are focused on restoring financial stability and resilience, amongst other things, through these increased capital requirements. If I look into national and European also politicians, they now focus on access to lending, possibilities for SMEs to have funding, and perhaps also creating new jobs and growth for societies. But what I'm questioning is, where are the incentives for the sector? Where are the incentives for the company to do so? Well, economic theory will tell us that the better capitalized a sector is, the lower would the demand for return on equity be. That goes without saying. So I can tell you, reality beats theory. What we see now, and what we have been experiencing increasingly since 2008, is an immense focus on return on equity. What the real decision makers are focusing on is return on equity. In fact, nothing more, nothing less. Last week I talked to an analyst and he said, well, Michael, I do not oppose to sustainable banking. It's okay with me, and I do not oppose to job creation and opening of new branches. I just deliver what my customers are asking for. And what my customers are asking for is the prospect of return on equity. So when the investors asks for that, this evolves through the board, to the top management, to the employees. Everything is about satisfying the market. Even though we see, for instance, in a company like Nordea, that I know very well, this demand in fact comes from investors controlling only 20 to 25% of the shares. This is actually sufficient to control the entire company. And in the light of high demands for return on equity, incentive schemes are created for top management and key employees. A big majority of the employees are subject to immense measurement systems, control and benchmarking systems, which more than often in fact threaten their work-life balance, causing stress and risk also for the consumers that they do not receive the advice that they need. We see a small tendency, I must say, in Denmark to a decrease in measurement systems in a few banks, but it is moving much too slowly. And this is still seen in the light of the owner's demand for higher returns. If we want to change this behavior of finance, which we all are talking about, we must change the behavior of investors.
Of shareholders. Broadly speaking. Yes, Nicole.
It's interesting. I would like to expand on this because I think it's talking about our experience as an ethical bank. I think we can refer to more intangible incentives, which are relevant, however. Of course, and which in the end might as well guarantee the return on the equity, on equity that it is so much sought by investors, by people. And I think for us, one of the, I know I may be sort of using a language that sounds a bit peculiar, but that is our reality. For us, for example, one of the important incentives that is working on all the stakeholders, which we now, since words are important, we don't call them stakeholders anymore, we call them value holders. Value holders. For us, the incentive is the sense of belonging to a community of over 37,000 people today, no longer in Italy alone, but also in Spain. And this community, which is very diverse, you have, you name any kind of political, ideological origin, it's all there. And you can see it sometimes in our branches that you have the nun next to a kind of a very sort of left-winger or someone. So you have a very diverse community which does not have any proprietors, so to speak, no owners. It's a community with no power attached, if not the sense of the community. And this, I think, is a huge incentive. I know it might sound a bit rhetorical, but as a matter of fact, the fact of being part of a community, gives a lot of boost to the people working there, not having, having a sort of sense of pride or sense of feeling the privilege of working for this political, strongly political, not just financial, but strongly political and civil project. It gives a lot of boost to the members of the board, of course, to the sense of responsibility to the executive the direction and so on and so forth. And I would say a lot of responsibility to the members of this cooperative bank, who are constantly asking for more, who are constantly challenging, so they feel participating, they feel that they participate in this project, and they actually are very present. I mean, as a board member, I feel them here all the time, all the time. They are involved in the type of evaluation that is carried out by the bank, which is not just a financial evaluation of the lending or the request of the funding. It's also a environmental process, which today Banca d'Italia, the central bank, considers one of the key reasons why our deterioration of the credit is so lower than the system, the banking system in the country. So I think this question of being part of a community is very important. I think that also there is increasingly the sense, and it is an incentive of a successful banking experience. I think while today, our in the stability law, in the new budget law, the main mantra about the financial system and the banking system in Italy is the creation of a bad bank, where we are a good bank. I mean, so far so good, and we act as a good. This is a very, a very important incentive. It actually pushes people to feel that they have a motivation to work. They don't need the monetary one. They don't need the short-term, push. But it's the value chain that is very strong, and that is a very strong bond, and also an important measure when things don't go well, to feel participation, to feel that there is a role for each of us to play, for me as a board member, but also for the latest person employed, that we all have to share the same goal. And finally, I think it's one of the incentives, intangible ones, because I'm sure that you will bring a lot more of the tangible ones, is this idea that we need to push the line a little bit further. We have to really, stretch the space, create new space for the financial protagonism, as it was said in the previous panel, not just for the experts, those that own the business, but also for the people that need the financing. So for us, this aspiration of involving citizens and society in this exercise, in this adventure, I would say, is also a major drive for innovation. I mean, not innovation at all costs, the innovation that you cannot stand on the way, but innovation in terms of looking how we can also change the regulatory system. I will make a final, just a simple case, very recent. I mean, it's a kind of an anticipation. We are now reforming our governance system, and I think we are the only one bank in the world which has received a green light from the central bank to have a very kind of hybrid electoral system, which will allow in both the governability, the kind of stability, the governance, continuity, but also the element of representation that must be intrinsic in the governance of the ethical bank, meaning that all the value holders will have to be there. So we are trying to combine governance, a stable governance, with a solid democratic approach, because we believe that the democracy at the end of the day is the overall incentive that I think pushes this community in a post-democratic world.
Thank you. As it has been said, you stopped by speaking about governance, so I think that you are going to jump into this field, I think. Yes?
Okay, up to me.
Yes?
Maybe just to go back to your initial question, you said, and I think you're absolutely right, you should make a difference or a distinction between behavior and the output. And the output is indeed maybe short-term or ad hoc, but you want to influence behavior so that in the long term things flow as you hope they will go. And you seem to be a very good example with your bank where you have already managed to get the right behavior. You try to at least. Maybe just to take one step back, of course, a lot has already been done at the regulatory level. Without being complete, I know that the Basel Committee on Banking and Supervision and also the OECD have worked on corporate governance guidance and principles. The G30 issued a report. The Financial Stability Board has asked half a year ago, a bit to my surprise, but okay, to the FSB to work on a code of conduct for banks. In the UK there's experience with this. I don't know, it will be a code of conduct developed by the FSB, so worldwide. So that comes to my first remark, okay, you have then the kind of global principles. And does ethics, integrity in Asia mean the same as in Russia or as in Europe? So I'm very curious to see how that code will look like. So a lot has been done from a regulatory point of view. Question is, of course, I think you were hinting on that, how much regulation do you need? That's always the question. And do you get the balance right between regulation and softer incentives? For me, and I think I've said that already, at the end of the day, it comes back to the mentality and the organizational culture. Yeah. Two things in that context, for me, that I find very important, and we try to reflect that also in our work. Strong transparency requirements, show what you do, don't be afraid, be very open about things, and accountability. Now, this sounds very nice, transparency, yeah, we're very transparent, we're very open. How do you do that? And for that you need, however, I think, robust governance arrangements. You must have clear lines of responsibility. You must have allocation of duties in an institution without overly structuring this, of course. Because then the individual staff member knows where he stands, what he has to do, what his responsibility is, and so on and so forth. Attached to that is, and a number of organizations in the financial sector, but also in general industry, have done a lot on training and education, awareness. It's always nice to talk about this, and I like to philosophize with you a bit, but you need to be aware about it. And I give you the example in the Commission. A couple of years ago, we also had our scandal. Someone who really went off track and financial problems and so on. And it was a wake-up call. And we have been trained, we got courses, we got awareness settings. Everybody had to be there. Director General was there, and we were trained. And it was very interesting. Also, you learn things about yourself. You think that your moral compass is the right one. And of course mine is. But there are certain things that you think, oh, hang on, maybe in this or that situation, maybe I would not have done the right thing. So training is important, awareness, and it's an ongoing exercise. It's not a one-off shot. You have to continue that. Not too much, because otherwise people get tired of it. But this awareness raising is important. Some companies have worked, or countries have worked on codes of conduct. And I know, for instance, the Dutch Banking Association, I don't say this because I'm Dutch, but I think they are a little bit ahead. They have an industry-wide code of conduct where every member of a staff member has to do an oath. In the beginning, I must say, I had to smile a little bit. You know, I swear to be a good banker. But it seems to work. And people take it very serious. And there's also a private sector disciplinary sanction system. So these are interesting ideas. I'm not saying that what works in the Dutch context works in every member state. Every member state is different. But these are the kind of things that might be useful. Maybe I stop there as well. Thank you. Sue, do you want to follow on?
Yes, thank you very much. I just wanted to mention a quick fact I maybe should have mentioned before, actually. The UK economist John Kay has recently written a book called Other People's Money, And in that, he asserts, and you may know this already, that less than 5% of bank lending actually goes to the real economy. Banks make more money lending money to each other, and you've got to how does that work, you know, and what does that do for incentives for ethical behaviour? My guess would be not very much. Leaving that aside for a sec, yeah, we've looked a little bit inside the culture of banks in the UK, and of course it's very difficult to measure. You can do away with some of the very kind of obvious incentives for poor behaviour, like, you know, gross incentives to sell too much of a particular product, as happened with PPI. We had a case where some poor guy was actually selling insurance to his friends, his family, his mother, simply because if he didn't, he would be fired. And I think a lot of those sort of really bad incentives are disappearing now from the system in favour of a slightly more balanced look. But I think some of the things, I think, Michael, you said right